This week, we're talking supply and demand data, June retail prices, and consumer sentiment. Welcome to the weekly Livestock Market update on Brownfield. I'm Brent Barnett, filling in for Megan Grebner this week. With us, as always, is University of Missouri's Scott Brown. Scott, how are you doing here this week?
Hey, I'm doing good, Brent. Summer's here, right?
Summer's here. We're moving right along, and we're in mid-July, and we have a lot of information to get to today, especially as it relates to the supply and demand report that came out on Friday. But first, Scott, let's get a check of what happened this week in the markets.
Yeah, Brent, if we start on the cattle side this week, we were generally lower in terms of cattle markets. After what's been a good run of higher prices, live fed cattle this week are down $3. You look at the feeder cattle markets this week, they were 5 to 10 lower. And don't forget, we're coming off of what was the July 4th week where many of those markets had been closed. On the future side, the August live cattle futures contract was down 375, and the August feeder contract closed down 250 on the week. That is despite the fact, you look at September corn futures and they fell 7.25 cents again this week. Choice box beef prices were also lower this week. We were down $5.20. Ribs, loins, and briskets really led the way down in terms of those lower box beef prices. On the pork side, cash barrels and gilts, they were also $1.50 lower this week. The August lean hog futures contract closed down 35 cents. We did see an uptick in the pork cutout value here late in the week. It was up $1.30. Both hams and bellies led the way for higher pork cutout value.
Scott, it seemed on the cash cattle side of things that we kind of broke a trend going back several weeks of having no business until late on Friday. Why did we see the trade pick up earlier in the week this week?
Well, I think we had a lot of folks who probably needed to buy cattle after that 4th of July week that was slower. And I think that really got us started in terms of buying cattle earlier this week.
Cash hogs had a tough end of the week, sharply lower again on Friday, down more than $3 at the National Daily Direct. What are some of the main reasons that we saw some price drops there?
Yeah, so Brent, I think we're in a situation where if we look at the run of hogs this week, about 2.4 million head, still reasonably large runs happening. I don't want to say burdensome, but larger runs, and I think that's up against some demand that may be slowing a little bit as we've maybe ran through the peak of what's that summer demand pop that we normally think about.
Wholesale business did have a strong back half of the week. Should we expect that trend to continue?
So perhaps we'll see what next week brings for us, but it looks like to me maybe it'll be hard to continue that positive. I see a lot of sideways to maybe a little bit lower as we move forward here over the next several weeks on the wholesale side for pork.
Now, Scott, when it comes to the cattle markets and the growth that we've seen, should producers expect that kind of pace to continue? What would your advice be there?
I wish I knew the answer to that question, Brent, but I'll say this for producers out there. We can, although we were lower this week, we're still talking about cattle prices generally that are close to where record levels sit. I always like to say I think there's more downside risk when we're at these lofty levels than upside. Despite, if you ask me my forecast, I think we could still go higher. Maybe that all just says risk management is more crucial right now, and opportunities for risk management at higher prices certainly exist on the cattle side. But let's make certain that we think about how much risk we can stay in as those individual operations and take advantage of what the market's offering if we need to lay off risk to others.
What would be some of your main things for hog producers to watch as we move further into the summer when it comes to the lean hog prices?
Yeah, so I will keep saying I see a lot of sideways to those hog prices. We've been going sideways for a while. I guess for hog producers, part of what I keep saying is feed prices. We're getting cheaper corn out there in front of us. Gives us an opportunity to talk about better margins than otherwise would be the case. However, that corn crop's not in the bin yet either. So the opportunity to to lock in some lower feed prices. Maybe some folks are going to want to take advantage of that, especially if we continue to see good weather in some of those corn growing regions, and we continue to push prices lower. Certainly talking about a very different corn price than we did a year ago at this time.
Let's turn to weekly slaughter, Scott. We're past the Independence holiday week. What did we see on the numbers this week?
Yeah, so we kind of came back towards where we've been running of late. Cattle for the week ending July 13th, USDA set a run of 601,000 head of cattle. That is 79,000 head above the holiday lower level we saw last week. But it is down 32,000 head from where we were a year ago. And on the hog side, a run of 2.386 million head this week. Again, that's up 352,000 from where we were on the July 4th week, and 48,000 head above where we were a year ago.
Any concerns there on being down on year ago levels?
No, I expect we're going to continue to be down on year ago levels. I'll say it's amazing. Overall cattle slaughter down 4.5%. Yeah, when you look at beef production, we're down a lot less than that. Those heavier carcass weights, although we're not quite as heavy as we once were, continue to help increase the amount of beef supplies we have. On the hog side, we're up in terms of hog slaughter 1.1%. I think that's part of the reason why sideways hog prices have been with us for a while as well.
How about retail prices, Scott? What do we see in the month of June?
Yeah, so we saw on the report we got this week a choice beef retail price really basically unchanged in June relative to May. It was up a penny, $8.12 a pound. That's still a lot higher than we were a few years ago. However, when you look at the individual pieces of that, ground beef prices were up 11 cents or almost 2% from May to June, while steak prices fell 10 cents. That was down about 0.9%. So we're certainly seeing that demand for ground beef. I don't know if that's translating as consumers are looking for cheaper alternatives and pushing those ground beef prices higher this month.
Well, this week was a report week from USDA with the supply and demand data that came out on Friday. Let's get a breakdown, Scott, and take a look at the numbers.
Yeah, so I like to start by looking at beef production to begin with. USDA raised both 2020 their forecast for 2024 and 2025 beef production relative to what they said in June. They were 65 million pounds higher in this projection for 2024, and added 100 million pounds for 2025. Those aren't big changes, and it still leaves beef production 4.5% below 2024 in 2025 if those forecasts come true. So still tightening. I'm not suggesting otherwise, but it certainly is. They're beginning to lower that decline in beef production. If we look at pork production, USDA also raised their projection for 2025 pork production by 150 million pounds this month. They're saying for 2024 a 28.2 billion pound level of pork production, followed by now what's 2025 prediction of 25.6 billion pounds. That's 1.5% up. Productivity gains, I think, continue to be driving higher pork production. USDA did trim their 2024 pork export estimate by 115 million pounds this month, left 2025 unchanged. Good news here, I think, for cattle producers. USDA was suggesting a $1.89 fed cattle prices back in June with that June report. They raised them $2 to $1.91 in the July report. So still some optimism about where we go in 2025 in terms of cattle prices, and in fact raised the 2024 projections by nearly $3, saying we're going to end up at close to $1.87 this year. So it's amazing where we're at on cattle prices, and USDA, as I think many of us would say, we're going to continue to see higher prices as supplies remain tight. Did get a 10 cent reduction in the 24 25 corn price with the acreage and yields USDA gave us. So $4.30 is their projection for 24-25.
How did this shape up with your pre-report expectations? Were there any surprises?
No real surprises. I think the one that's always hard is record cattle prices, and we're forecasting record cattle prices. Again, I'm not in a different camp than where USDA came out, but it's hard to believe we're going to talk about an annual average $1.91 fed cattle price when it wasn't that long ago we were in the $1.20, $1.30 range, Brent. So that really jumps out at me, but certainly isn't much of a surprise relative to what we got out of this report.
What should be the main takeaways for farmers and ranchers from the report this month, Scott?
So I think there is a little bit of difference here. So cattle, more positive. Hogs, on the other hand, just what was a 1.5%, what would be a 1.5% increase in pork production ought to continue to make us think about price risk management. If that 1.5% increase in production that USDA is projecting happens, does that push prices lower? USDA is suggesting basically hog prices unchanged again in 2025 relative to what we're seeing this year.
Also, let's talk about consumer sentiment. The July index. What did the reading show us there?
Yeah, so not positive news on that front, Brent. When you look at the July index of consumer sentiment, it was 3.2% below where it was in June. So we continue to see some sliding lower of that index. That is 7.7% below where it was July of 2023. I think consumers continue to worry about high prices. So although we are seeing inflation slow from the reports that we're getting out of late, it hasn't caused prices to move lower. And I think the longer consumers have dealt with high prices, the more it's kind of been on their minds of how do we break what's all the additional costs they face today. And of course, with presidential elections coming up, there seems to be a lot of uncertainty about what that means at the end of the day. And I think all of that has weighed on the July consumer sentiment forecast.
A lot of great information here, Scott. Looking ahead, what are some reports that need to be top of mind?
Yeah, so the big one for next week that we're going to have to watch, cattle on feed next Friday. Of course, we're going to be focused on the same things we have been for several months now. What's the on-feed inventory as well as what we place? Those are going to be key indicators of what happens in terms of beef production as we move to the latter part of 2024 and early 2025.
Scott, it's always great to fill in and be able to catch up with you. Hope you have a great weekend, sir.
Hey, you do the same, Brent.
Again, that's Scott Brown with the University of Missouri. To have our weekly livestock market update delivered to your email inbox every Saturday morning, you can go to brownfieldagnews.com. And you can also submit questions and comments there as well. And also be sure to check out the Market Minute program hosted by our very own John Perkins. I'm Brent Barnett on Brownfield. Have a great weekend.